Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of September 8th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage here to give you an update. Well, last week, Delaware mortgage rates were able to touch the lows of 2014 again, as we saw some weakness in the stock market at the end of the week. If you take a look at the bond chart on the screen, you can see that mortgage bonds rallied on Friday with that big green candle, went all the way up and touched that big line of resistance that's been the low point for mortgage rates for 2014. Now, we were turned lower, and you can see they did sell off, but we did end the day higher than we started and ended for the highs for the week. So we're going to recommend locking your Delaware mortgage rate for anything closing in the next couple of days, the next couple of weeks, because since we were turned lower by that ceiling of resistance for the bond market, a short-term trend could be for the bonds to sell off as they've been turned lower, as has happened in the past before. So take advantage of these record low rates for 2014. Lock in your rate because they're probably going to, in the short term, could move higher because we failed to break above support. Now, in the news, big report last week on Friday. The jobs report for August 2014 was released by the Labor Department. Very disappointing. Only 142,000 jobs created for August. They were expecting 223,000 jobs. And we also saw a revision of June's numbers. They were lowered by 28,000 jobs. So all in all, not a good report. Now, unemployment did tick down from 6.2 to 6.1%, but that wasn't even good news, because the reason why unemployment dropped was not because people went back to work, but people fell out of the workforce by that number. And we saw that by looking at the labor force participation rate. It dropped lower from 62.9 to 62.8%. That measures the number of people 16 years or older that are eligible to work that are working. So if that number dropped and unemployment dropped because people are not working, and people dropped out of the workforce for the measurement for the unemployment. So even though it dropped, it was not a good report. So we're going to have to keep a lookout. Was this an anomaly, or has the labor market shifted, and we've been seeing job gains of 200,000 each month for 2014. So if we've got a shift in the market, that could be good news for mortgage bonds. That was what helped the rally on Friday, so we'll have to keep a lookout for that. Then we saw the European Union met last week, and they lowered their lending rate by 10 basis points from 0.15% to 0.05%. That's the rate at which banks can borrow money. So they're trying to stimulate the economy, do the same thing the Feds have done here for a couple of years. Europe is in bad shape. A lot of countries facing recession, huge debt problems. So that's resurfacing its head. That could be good news for the bond markets. We'll keep a lookout for that. And then we also saw the weekly initial jobless claims released on Thursday. They came out at 302,000 claims, up 4,000 from the previous week. They were only expecting 300,000 claims. So we'll need to keep a lookout on that. With a bad jobs report and claims slowly ticking up, we're going to see if that's an anomaly for August, or has this trend shift in the labor market, which would not be a good sign for the economy. Now, in housing, CoreLogic released their home price index for July 2014. Year-over-year home prices appreciated 7.41%. That's the 29th consecutive month of year-over-year home price gains. So home market doing good. Remember last report we talked about the new home construction had some fabulous numbers. So home prices are still appreciating. From June to July, they were up 1.2%. They're predicting about 5.6% year over year. So definitely a good time to buy a home. You still got plenty of upsides. Home prices on the average are still 12% below the peak of 2006. So we still have some upside there. So it's still a great time to get out there and purchase a home. And then in housing news, we also got USDA reiterating that they are changing the monthly insurance premium effective October 1st, with all commitments October 1st or after. So the current factor is 0.4%. It's going up to 0.5%. Not a huge amount, but you do need to be aware of that. If your lender does not redisclose for that and you don't get your commitment by October 1st, they will have to, and that could cause delay in your settlement. So be aware of that. If you have a current USDA loan, check with your lender or give us a call, and we can let you know what's going on with that. In the local news, the next free first-time homebuyer seminar is Saturday, September 20th. That's in Newark, Delaware at the Christiana Hilton Hotel from 10 a.m. to noon. And then the next one in Dover is Saturday, October 11th at the Dover Holiday Inn on Route 13. That's from 10 a.m. to noon as well. You can register for either one of those events. We give us a call in the office at 302-703-0727 or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.